Hello. Today we'll be discussing a company with an exceptionally profitable business model. It has an operating margin above 56% and return on equity above 67%. It is not over-leveraged with a total debt to equity ratio just above 27%, and in 2026 it might have a dividend yield of around 10%. It has grown both top and bottom line double digits every year since 2020, yet despite all of that, year to date the stock is down 23%. We will be talking about Kaspi, e-commerce fintech super app from Central Asia. And if you want to know why I think it's a rare buying opportunity, please stay tuned. What does Kaspi do? Kaspi runs a super app that integrates around 100 different services into a single user interface. It would take too much time to go through all of their services, but it is enough to learn that in a country of Kazakhstan with a 20 million population, Kaspi has 15 million average monthly active users, and 69% of them, or 10 million, are daily active users. In other words, half of the Kazakhstan population using Kaspi app daily. The company has three main segments that generate revenue: payments, marketplace, and fintech. We can see that payments revenue is up 16%, income 19%, marketplace revenue up 25%, net income 13%, and fintech revenue up is 21%, income 8%, for the total consolidated revenue growth of 20% year over year and 14% for the net income. What do they mean by payment segment? Users can utilize Kaspi to pay their taxes, bills, make B2B payments, or purchase services or goods online, or pay by using Kaspi QR or cards. This is actually the most common way of making the transactions in Kazakhstan, and I've heard several stories of tourists not being able to get change because nobody uses cash and everyone is using Kaspi. What do they mean by marketplace segment? The super app serves as a platform to connect third-party merchants and buyers. The company gets a percentage of each sale and also gets the revenue from the ads. What do they mean by fintech segment? Fintech segment include revenue from loans and buy now pay later option. Both are organically increasing user interaction with the marketplace. BNPL is especially popular in Kazakhstan because in a country constantly facing high inflation, consumers sees an opportunity to stretch their payment over the period of 2 years with zero interest as a discount, because the future value of money is almost guaranteed to be much lower. So why is the stock down year to date? The main reason for that is Kaspi's expansion into Turkey. In 2025, Kaspi has bought 66% of Turkish marketplace Hespiburada for $1.1 billion. I believe that the Kaspi management went with this acquisition because they realized that they are getting very close to the saturation of their total addressable market back in Kazakhstan. What a great problem to have. And with expansion into Turkey, they would get an exposure to 12 million active customers of Hespiburada and a total addressable market of Turkey, which is 100 million population strong. This expansion has been met with investor skepticism because Hespiburada, unlike Kaspi, at the moment of purchase wasn't profitable. Also, Turkey is facing major macroeconomical problems with their inflation running wild. In 2024, their inflation was around 60%, and in 2025, year to date, their inflation is around 30%. Also, to finance the expansion, the management decided to pause their dividend payments for the year 2025, which has naturally drove off some of the dividend investors. and excluded Kaspi from the regional ETFs that require dividend payment. This has negatively affected the price of the stock. However, I personally believe it was a prudent decision from the management. Also, we can see from the latest Q2 report that it is heavily hinted that the dividend payments would be renewed in the year 2026. Has Hespiburada profitability improved since acquisition? The short answer is yes. Judging by net income alone, we could see that the income has decreased, but it is somewhat misleading since earnings are masked by global costs and loan provisions. If we have a look at the latest quarterly report of Hespiburada, the cash flow statement indicates that the net cash flow has nearly doubled, which is a strong indicator of Hespiburada turnaround story taking place. Here we can see that the net income loss from Hespiburada has a minor effect on overall earnings of the company. However, in the long run, it greatly expands total addressable market of the company and opportunity for growth. What about future growth in the home market? We can see that the company is adding new services, and those services are experiencing explosive growth. For example, e-groceries gross merchandise value is up 57%, or Kaspi advertising is up 91%. And they have recently launched restaurant billing, which is scaling fast. So we can conclude that the company, despite capturing most of the adult population of the country, still have ways to grow by introducing new services and further integrating into everyday lives of their users. The reasons to buy from me are quite straightforward. I see a dramatic disconnect between the high quality of the business and its cheap valuation. The company is a local monopoly with 50 million active users. The super app has become a cultural phenomenon that digitalized many aspects of everyday life of Kaspi users. The company runs a highly profitable business model with an operating margin above 56%. In my opinion, high profitability and robust growth are stemming from innovation. The company's ability to expand and diversify their services, either getting a new revenue stream or locking their customers in their vast ecosystem. And you can get all that with a price to earnings below 7. If we compare it to a historical median or average, we can see that it's trading far below its historical averages. So this is my very simple price prediction sheet. I have used the forward EPS of 13.11. I believe it was calculated with an assumption that the company will grow their earnings 15% in the next 12 months. And let's say that the sentiment around the company won't change and the future PE would still be 7, then the future price will be 91.77, will give us a nice upside of 25% still. But let's say that the sentiment will improve and that the business in the Kazakhstan is still robust with a good growth and guidance, then maybe PE will rise to its 3-year average of 10, and it would make the future price 131, which is an upside of 78%. Well, let's say that the expansion in Turkey is going better than expected, and that the Kaspi business model has improved Hespiburada operating margin, which is right now is very low, I believe below 1%, and investors see that it could be a meaningful addition to their revenue in the future, then maybe future PE will rise to 12, which give us almost 115% of upside. Of course, something bad could happen, especially in a country with a macroeconomical environment as Kazakhstan or Turkey, and sentiment will go down. But the good thing about this stock, it's already trading at 7, like how much further it could go down in terms of valuation. Then there is a question of the dividend. I can't be sure if they would be paying the same amount as they did in 2024. If they would, it would yield a 10% dividend. I believe that if management would decide to pay less dividends than they did in 2024, it wouldn't be too much less. So for my calculations, I use 5 to 10%, which is still a very hefty dividend. Hopefully you found this video useful. This is literally my first video, so if you like and subscribe, you'll make my day. Thanks for watching. Do your own research, become rich, and I'll see you next time.